and welcome to Startup Street. I'm Ritu Singh, and with me Ashwati Mishra and Arundhati Ramanan. Here are the key headlines from the startup space.
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court.
US government's case is misguided and we will fight it in court, says Adobe CEO Shantanu Narayan. This comes just a day after Biden administration sued Adobe for allegedly violating consumer protection laws with hidden termination fees. That's a CNBC-TV18 exclusive.
NVIDIA surpasses Microsoft as the most valuable public company in the world. Shares of the semiconductor maker are up ninefold since 2023. This is the first time a company other than Apple or Microsoft has held the top spot in the last 5 years.
Aditya Birla's Tomorrow House of Brands will invest 125 crore rupees in Virat Kohli and Axel-backed casual wear brand Wrong for a 16% stake. The deal values Wrong at 780 crore rupees. Tomorrow now has 8 Indian brands in its portfolio of brands.
Umeed Housing Finance bagged $76 million in a Series F round from A91 partners, Mirai Asset and Anicut Capital. Existing investor Norvis Venture Partners also participated. The funds will be used to fuel expansion plans into central and southern India.
Indian BC, a decentralized venture community, launches its flagship platform, promises to transform India's startup ecosystem by tackling critical challenges in fundraising and hiring, and aims to become the mini Y Combinator of India.
Those were the headlines that we're tracking for you this evening. But the top story today, a day after US government filed a lawsuit against Adobe, the company's chairman and CEO Shantanu Narayan spoke exclusively to CNBC TV18. He termed the US government's case as misguided and promised to fight it in court. The Biden administration sued Adobe for allegedly violating consumer protection laws with hidden termination fees. Adobe has denied all of the charges. Speaking to Shireen Bhan at the Adobe headquarters, Narayan said the world has entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler and tailwind. After a backlash, Adobe has clarified that it will now not train its AI models from user content. Here's a slice of that conversation.
What's the most exciting aspect of FY24 for you at this point in time?
Well, I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI.
The fear that this is going to mean the end of art, it's going to mean the end of music. I mean, how do you respond to that?
I think it's just the opposite. I think it's absolutely just the opposite, because what is going to happen right now is it's going to enable so many more people to enter the creative field. If you can draw well, you can start with a drawing, you can scan that into an Adobe product, and you can make a creation out of it, And so I'm completely convinced that just like every other piece of technology, when Photoshop came out first, people were really questioning whether that would mean the end of photography as we know it. And we know that, the story was just the opposite. I mean, Photoshop enabled millions and millions of people to, pursue this craft. And now I think it'll be billions of people. I always say when I grew up in India, it was reading, writing, and arithmetic. But now it's all about... And cricket, of course. That's a passion. But it's also about digital literacy. And so I think on the creative side, AI is going to be this massive ability for people to say, how can I create something? And even on the fly. This product that we have called Express, it allows you to do it on a mobile device. So on the creative side, I'm completely convinced that it's a massive tailwind.
And I know that you've already clarified that you're not using user content or user data to train the models. And you've put out, in fact, just this morning, a fresh clarification on that. But where do you believe this trust deficit comes from? And how do you believe a company like yours will need to address it?
Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered over 3,000 companies have now signed up, whether it's a camera manufacturer saying, when we create a camera picture, we will put a provenance or a nutrition label on it. Companies like Adobe, where in our tools, when we edit it, we'll allow you to create that digital certificate. And then, people who are the publishers, the New York Times, Meta, everybody is also signed up to say, let's make sure to combat deep fakes that we have the ability to do that. I think, while people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large. And so I think to the conversation that you were having about our terms of use, I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So,
which you have today.
Which we have. And so, we've rolled it out. We are creator friendly.
Countries are looking at AI regulation differently. I mean, for a company like yours, how do you navigate what is going on today? Because there is a fair degree of uncertainty around what will be permissible, what will be allowed, and where it will be allowed.
You're right, because of the fact that people appreciate that AI can have this incredibly profound impact on lives. But it potentially could do some harm or have some unintended consequences. And so, whether it's the sovereignty of data or whether, what these models might be used for, there's a lot of discourse that's happening in every country around the world around what this means, whether it's the US, whether it's Europe, whether it's India. And to your point, they're doing a whole bunch of things like AI acts. I think the narrative has perhaps, gone a little bit towards one or the other extreme to the conversation we had, which is either people believe this is the panacea to everything, or people believe that it's so evil that no good can come of it. And the truth clearly is somewhere in the middle. And so, I'm a firm believer that this technology is moving so quickly. They're trying to regulate it prematurely, I think will competitively put countries behind.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this.
So how significant will India be to Adobe's plan, especially as you build out your AI suite of services?
It's massively important.
All right, and moving on to what's brewing today, new age beauty brand Renee Cosmetics has raised 100 crore rupees in a Series B round led by existing investors Evolvance India and Edelweiss Group. The current funds were raised at a valuation of about 1,200 to 1,400 crore rupees, which is a 60% increase from the previous round's valuation of about 850 crore rupees. Now, through all of these rounds to date, Renee Cosmetics has raised about $45 million in total. Joining us now to discuss the company's funding and its plans ahead is Ashutosh Valani, the co-founder and director of Renee. Also with me is my colleague Shruti. Ashutosh, welcome to Startup Street. Thanks very much for your time here. This is Ritu. Tell us about this 100 crore funding, the valuation jumping by 60% since December 2022 when you last raised money. What enabled this kind of jump in valuation, and how exactly will you deploy the money?
First of all, thank you very much. Thank you for having me on the show. So the plan is that our revenue has already jumped 3 times from our previous funding. So the more focus was to penetrate offline, because we feel that beauty and cosmetics, it is very important that our customers get to feel the product. right? We are into an instant sort of gratification business. So it's very important that people come, experience, feel the products, watch it on their hands, like it, and then buy. So this particular round of funding will be majorly into offline and sort of catalog expansion.
All right. Hi, this is Shruti quickly stepping in. You said the money will help expand the business further, especially, you plan to further penetrate offline. But can you throw some light and elaborate on what this would entail in terms of your product portfolio?
Sure. I think, Renee has always stood out as one of the most innovative, makeup and color cosmetics brand in the country. So we want to really set up our research and development and offer more to the consumers. Now, currently, we are actually present in 1,200 offline shop-in-shop models with about 1,200 plus beauty advisors selling every day. We want to double the footprint within the next 12 months. While we do that, we also want to bring a new set of innovation, because what we feel is in the last 20-25 years, not a lot has been actually achieved and done into this particular space and segment. And we want to be that primary driver into creating newer products. And also to the market, we want to offer more for less, as in more product for less amount of money.
Well, Ashutosh, as you earlier said, the touch and feel for these beauty products is very important to the customer. So in terms of your omni-channel presence strategy, 40% of the business is still coming from offline channels, as we understand, which you want to take up further. What would this mean in terms of your retail expansion plans, whether it is shop-in-shop stores, or are you planning any standalone stores as well? What's the strategy?
Sure. So I think plan is divided into three parts. One is to increase our 1,200 stores into about 2,500 stores, which is shop-in-shop. We also want to increase the footprint into the GT stores, which is the general trade stores. We actually want to commoditize certain makeup products, which are a daily use product, say something like a kajal. So we were one of the first ones to bring a kajal within a built-in sharpener. So we want that to expand into about 25 to 30,000 stores across tier 1, 2, and 3 cities. The third part is to also open our own stores. We have about 5 to 6 stores, and we want to take those to about 50 odd stores in the next 12 to 18 months. So this is the trio strategy for expanding offline. The plan is to increase this 40% offline business and move it to about 50% of our total business in the next 12 months.
All right. So you plan to increase the offline business to 50%. And thanks for giving us a lowdown of your omni-channel play. But Ashutosh, let me now quickly talk about the beauty space. You're competing with peers like Lakme, Sugar Cosmetics, My Glam, as well as globally well-established brands. How are you differentiating yourself, and what kind of market share do you hope to be able to capture in the India market?
See, I think the market in itself is growing, right? So to answer your question, what we feel is that the unorganized sector is now quickly moving to the organized sector. This 1 lakh plus crore beauty market is growing by 15% CAGR at the minimum, right? We don't see the names that you mentioned as one of our competitors, but we see them as friends, because all of us combined are actually spreading the knowledge of using the beauty products. We feel that the Indian market is still at a very nascent stage. So we want to participate in this and grow this. See, currently we are at an ARR of 350 plus crores. We want to grow to about 500 plus crores by the end of this fiscal year. So we are focusing on that. We are not worrying about what all the others are doing. Renee has always stood out for innovative brand, and I think that is what is going to be at the core of how we grow. And that is also going to be one of the biggest sort of differentiator, adding aspirational brand value, adding newer products to the catalog, offering better price, better opportunity, and also being there in the market. I think that is one of the bigger things, availability. A lot of people, a lot of Indian consumers today ask for Renee products, but we are not able to reach because of the distribution. And I think that is where we are going to grow from here on.
Well, Ashutosh, it's nice to hear you're calling your peers your friends. But, a final question. You claim to have surpassed this 350 crores annual recurring revenue mark. What sort of growth or revenue and sales growth are you eyeing from here? And how soon will you be, able to become profitable? And I mean profitable after tax.
Sure. So I think in the last 3 years, we have every year we have actually doubled our growth. So we really want to keep doing this till we reach 1,000 plus crore kind of a revenue. So we see at least 100% growth for the next couple of years. Now, that being said, in the last 3 years, we have also halved our losses, right? So first year, we were close to 45% negative EBITDA. The second year, we were close to 30%. This year, we are bound to close at under 10%. So hopefully, we are looking to be profitable in the next 16 to 18 month period. And this is after tax net of everything.
All right, so eyeing profitability in the next 16, 18 months and 100% growth year after year. Ashutosh, we've completely run out of time, but many thanks for joining us on Startup Street today.
Thank you very much. Thank you for having me today.
Moving on. Financial services firm Avendus recently announced the launch of its third fund under its Avendus FLF or Future Leaders Fund platform. Now, FLF is a late-stage fund focused on large-cap investments in private markets, and FLF3 aims to raise a corpus of 3,000 crore rupees, including a green shoe option of up to 1,500 crore rupees. To elaborate on the deployment plans with Fund3, joining me now is Ritesh Chandra, the managing partner at Avendus FLF. Also with me, my colleague Arundhati. Ritesh, welcome to Startup Street. I believe FLF3 intends to make 10 to 12 investments with an average allocation of 200 to 300 crore rupees per investment. Tell us, what sectors are you looking at and how soon do you start your fund allocation?
Thanks, Shruti, for having me on the show. You're absolutely right that we're looking at about each investment of between 200 to 300 crores. We will start investing very, very soon in the next couple of months. Our whole focus and thesis is around 4 key sectors that we're looking at, which is consumption, technology, financial services, and healthcare. We're also looking at manufacturing on a selective basis because there are some very interesting opportunities which are coming through in the manufacturing space. But by and large, bulk of our portfolio is going to be concentrated in the 4 sectors.
All right. Hi, Ritesh. Arundhati here. You know, these are pretty big check sizes, right? So you said you'll start making investments soon. So will the investments include follow-on rounds for your portfolio companies, or will they all be new investments?
Yeah, they're all going to be new investments. We may land up doing some of the existing portfolio companies, but they're going to be part of fresh rounds rather than follow-on investments.
All right, so all new investments there, Ritesh. But tell us, what is your approach to deal selection? What is the evaluation process? How will Fund3 identify and then capitalize on promising investment opportunities?
Yeah, so Shruti, what we have done is, given the fact that we're investing in late-stage businesses, the companies that we're going to be investing in exist today. We've scanned a ecosystem of about 2,700 odd companies and identified 40 companies out of those 2,700 private companies. For these 40 companies, we've got an investment hypothesis ready in place, and we are going to be chasing these 40 companies. We've got a price target for all 40 of them. As in when we hit our price target, as in when the deal is available, we are buyers in these companies. Just to give you an order of magnitude on these 40 companies, and these are across all sectors that I spoke about, the non-promoter shareholding in just these 40 companies aggregates to about $60 billion as we speak today. So the market opportunity for the fund is very, very large. And, give or take, we are targeting about 0.5 percentage point of the addressable market opportunity.
All right. So, the opportunity is huge. Let's now talk about the recent achievements of FLF 1 and 2. You've got exits from Lenskart Solutions and the NSE, both generating nearly 4x returns, right? So elaborate on the kind of impact you've created so far from both Fund 1 and 2.
Yeah, I think the biggest advantage that we've kind of generated is the fact, one of the common cribs that we hear about the private market ecosystem is that investors don't get their money back. And I think the fact that we've successfully generated exits in a non-IPO format in businesses and returned that capital back to our investors is actually been treated very, very positively by the market. And I think what it does is it adds credibility to the whole private market ecosystem that, yes, there is money to be made in the private markets, and yes, investors do get their money back within the stipulated period of time. So that's been a great value add. And as I think over a period of time, this is going to be a virtuous cycle with, investors will be seeing exits, seeing their money coming back, or would be willing to commit more capital into more private market funds.
All right. One final question, before I let you go. FLF manages a consolidated assets under management of over 18,050 crores across the last two funds. You harness the potential of late-stage private opportunities and back differentiated businesses with sustainable competitive moats and a clear roadmap to liquidity, like you were just mentioning. How have you seen conversations evolve with late-stage founders?
I think there's been quite a dramatic shift in the last couple of years. I think one of the key focuses is about responsible growth, about profitable growth. There is a very significant focus across the board on profits and unit margins. And I think that was missing. Earlier, it was the whole commentary was around growth at all costs. Now it's all about profitable growth. And I think that's a very, very healthy sign for the ecosystem. So that's been one significant change for us.
The big change over there as well. But Ritesh, thank you so much for joining us on Startup Street, and we wish you all the best going forward.
Thank you so much. Pleasure being here.
Okay, on that note, we're going to have to take a short break, but don't go anywhere. Up next, 100x VC has invested in 17 startups as part of its 11th cohort. We'll tell you more about their investments right after this short break.
Welcome back. You're still with us on Startup Street. 100x VC, an early-stage investment firm, has invested $2.7 million in 17 startups through its 11th cohort. This takes the VC's total portfolio to 161 startups. The 17 startups selected were from diverse sectors and are based across Mumbai, Bangalore, Delhi, Pune and Gurugram, among other cities. Now, the VC Pitch Day held in Mumbai saw a turnout of over 400 investors comprising high net worth individuals, family offices, venture capital funds and corporations. Joining me now to discuss this further is Ninad Karpe, the founder and partner at 100x.vc. Also with me is Ritu, my colleague. Ninad, thank you so much for joining us on Startup Street. It's the 100x VC's 11th cohort. You've invested in 17 startups and you spent over 100 hours mentoring these startups. So take us through your selection process. What excites you about a specific company?
Thank you. Thank you for having me on the show. Yes, I know there are new ideas every day. We get close to 8,000 to 10,000 pitch decks every year, sorry. And we have a pretty comprehensive process of selecting the startups, from looking at the founders to the size of the market, how much they can grow. Basically, we invest very early. We look for moonshot ideas that can scale. What has changed over the past 5 years? We have invested in 161 startups. One or two quick trends we have seen is, firstly, we are seeing a lot of pitch decks now coming from tier 2 and tier 3 towns, which was not the case 5 years back. And slowly, there's a gradual increase in the number of founders and co-founders being women and girls. So that's a very nice change which we are witnessing over the last 3 years, post-COVID.
Well, Ninad, hi, this is Ritu. At 100x VC, you've invested in Anyway.ai, Baylink, DeepU Tech, and so on, just to name a few. What is the common thread here? What are you excited about most in these firms? And, what are the kind of ideas that you want to put your money behind?
So we want to put, in simple words, ideas of tomorrow, ideas that will become big, because we write the first check. Each of these companies you mentioned today are very small. They're very early. Do they have a potential to become a massive company for Indian market and the global market? We believe each of them can in 10 years' time if they do the right execution, get right funding. So these deep tech companies, we do not get many of them in India, but the ones we have funded, we believe each of them can become big. They have to be ideas which are either disrupting the present ecosystem, new, or actually doing something in a very, executing the same idea in a more efficient way, which is example like Baylink. GoCodio is, absolute B2B SaaS. It can really revolutionize the way code is written. I can go on, but the short answer is moonshot ideas with potential to become billion-dollar companies over a period of time.
Some moonshot ideas that have the potential to become billion-dollar companies is what you're investing in, and you're writing the first check, as you said. So you're writing a little over $1 crore per firm. So take us through how you will help these startups actually scale in their growth journey. How are you taking them to the next level? What's your investment thesis?
So we have a mentoring process where we tell them about GTM, pricing. They're very early, very young, and how to have a scalable model, how to focus sharply, how to execute. At the early stage, it's very important to focus sharply on one idea, one market, one target. If they do that right for next 1 or 2 years, then they gradually go on to next level of funding. When they come to us, a couple of lakhs. First target is in a couple of years to hit 100 crores, 1,000 crores. But that can happen once you have a sharp focus on one product strategy, then gradually expand markets, gradually expand the products, go on raising more and more funds, and ensure that there is a lot of scaling up process. The foundation has to be strong. That's the foundation we provide. The right strategy to become successful in one product, one market, one geography.
All right. And, Ninath, you've invested in about 161 startups through the company since the launch, we understand. What is the AUM you're currently at? And more importantly, what kind of AUM growth are you targeting? And the kind of returns you've seen so far, say from, the first 10 batches, how are they doing?
So we started 5 years back. So, it's still very early for an early stage fund. But we have seen around 3 full exits, around 3-4 partial exits. These are the ones we invested 5 years back. In between, there was COVID. So obviously, there was a lull in activity. In terms of AUM, presently we invest 1.25 crores per startup. For the first 70 companies, we invested only 25 lakhs per startup. So AUM is not large. It's around 120, 140 crores. But it is the model, early stage, first check, iSafe note. That is the model which, is a simple, straightforward process, which is attracting first stage founders, and they come to us. That's why you get so many pitch decks.
All right, Ninath, we're completely out of time on the show, but thank you so much for joining us on Startup Street today.
Thank you for having me.
Well, with that, it's a wrap from Ritu, Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.